Hey traders, this is Ron Haight. Happy Sunday. Hope you guys are having a great weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here using the S&P 500 ETF, the spiders. It's a daily chart. There, the high is 339.08, the all-time high set back on the 19th of February. We're basically there. We haven't closed there yet, but we are within striking distance. This high could fall Monday, Tuesday at this rate. Once that happens, we enter blue sky territory. It's an all-time high breakout, and the bulls can just run wild if they really want to at that stage. So the daily chart, the weekly is the same thing. It's bullish. What I would watch for signs of trouble when eventually some selling pressure does come in. The red line is the yellow flag. That's the 20-day EMA. We close below there. You're starting to get put on notice. The big one is the orange line. That's red flag territory. That is the 50-day SMA. We break that one, that institutional line, and then the bears start getting the upper edge. So bulls definitely have the edge here. Similar story with the Dow via the Diamonds ETF. Now, we're not challenging the all-time highs. The Dow is lagging, but hey, it's above both moving averages. So bulls here have the edge too. We take a look at the Qs. It's just up and away. They've shattered the old previous highs. They're just on, a big run. Same thing here. Watch the 20-day for the first sign of trouble, and then the 50-day as the big one. I had some questions on gold and silver. Now, in a previous video, I talked to you guys about the ebb and the flow, the seasonality effect, and usually gold puts in highs over mid to late summer and then going into the fall, and then we often see a dip even into December. Well, look what's happened. This past week, we had a $100 drop in gold or a $10 drop in GLD, its corresponding ETF. Now, what's happened here is interesting. We gapped lower, and then there was major selling. We finished near the lows of the day, huge volume spike, telling you the voraciousness, if you will. Then we tried to gap up. So we closed here, we gapped up here, and then it quickly went to the absolute lows of the day, another pickup in volume. And then comes Thursday, we actually gap up, and then we close higher, but we're not breaking out of this two-bar range. We're now getting trapped, and the trading range is developing. So yes, gold is above the red line. So from a 20-day perspective, technically speaking, gold is bullish. I would say this, though. Given how we have this huge gap, and this is not an island reversal, we don't have a clean cut here, but boy, is it close. The fact that we're trapped in here, to me, says just wait for it. Grab the popcorn, wait for the move. If we close above these highs, let's say 180, 184, then maybe a gap fills in the cards. But that's only like $6. That's not actually a great reward to risk ratio, in my opinion. We get below this low here, which is 179 essentially, then it's a $6 to $7 drop down to the 50-day. So right now, I'd just say caution, and then either from here to here, a short-term bullish trading opportunity, below here, a short-term bearish trading opportunity. It looks like the bears want to win here, given the amount of volume, but they haven't been able to really break it just yet. We take a look at silver via SLV, silver ETF. It's holding up better than gold a little, if you will. It's staying well off that 20-day EMA. This is also not an island reversal, but boy, is it close. Here's the big gap down. We have a gap up, close lower, but we still closed green because we still closed higher than the previous day, but it's lower than where we opened. That's why it's solid green. And then we got up here. We did get into the gap a little bit, but not by much. I would say this is still a trading range too. I would just say some caution here in gold and silver, especially just from the time of year. This is usually not the bullish time for metals going forward. If we take a look at the silver miners, how are they doing? Well, they went from 50 all the way down into the 40s. That was a quick 10% drop. Now they're back above the 20-day. So technically, because they're above the red line, the 20-day outlook is bullish. But because of how the metals are acting, I would just, maybe some caution here is warranted. And then GDX, George Delta X-Ray, the gold mining ETF, it's below the 20-day. This is bearish, and it's a bear flag. So on the daily chart, GDX is bearish in the short term. If it breaks the 50-day, that's more bearish. Now, if we move on to Apple, let's look at some other stocks. Apple did have a couple down days recently. Oh my God, but that didn't last long, did it? Right back up to new all-time highs. The pending 4-for-1 stock splits coming in later this month. We take a look at Amazon. Nothing has changed here. This is still a bull flag, if you will. It's a chop pattern. It's a sideways pattern. But look at the lows. We're getting higher lows. This is still bullish. If we break out somewhere above 3250-ish, that's a clean break. That would be bullish for Amazon. Netflix, having a little bit of trouble. We had that surge before earnings, then we had the reversal bar to the downside. We broke the 50-day back on Tuesday. Well, we broke the 50-day here too. And we broke the 50-day here too. What was missing from those 3 breaks? So we did have a fracture, a close below the 50-day, but there was never a second day. So for something like Netflix, if it breaks the 50-day, whether that's tomorrow, next week, or whatever, I want to see a second day. That will be the sign that, okay, maybe these one-day drops are just actually buying opportunities, and that's what's happened. People have been rewarded. We get 2 straight days below the 50-day, that's going to be a sign that maybe the sentiment is changing on Netflix. Keep an eye on that. Facebook, it broke out of its box, earnings related. If we zoom in, it breaks out, comes right back and tests the old resistance area. Isn't that something? This is technical analysis 101. Then we get the big surge, and now we're just consolidating again. So Facebook is bullish. Microsoft, it got near the 50-day last week, just like it did a couple weeks ago. So this tells me the 50-day is huge. And with the stock not basically going anywhere, really since early part of July, look how the 20 and the 50 now, those moving averages are getting really close. So a break below the 50-day here is big, and it's only $5 below the 20-day. So watch that on Microsoft below the orange line, that institutional line, technically bearish. Here is Google. After breaking out to new highs, it's come down, and look how the 50-day just keeps bouncing and bouncing and bouncing. We had a touch of it Monday, Tuesday, almost Wednesday. So these people that are buying the 50-day, when they are wrong, they could easily hit the sell button. So watch that 50-day on Google. Here's Tesla. They're doing a stock split as well, but they haven't broken out of their range yet. I could put a box in here and say, you know what, resistance around 1680, support around 1367-ish, give or take a buck. Until we break out of this box, I would be somewhat cautious. However, technically, we're above both moving averages. This thing is bullish. Now we have 2 earnings to watch this week. NVDA is one of them. They have earnings due out, according to Thinkorswim, on 8/19, which is going to be Wednesday after the market closes. NVIDIA is already in a bullish seasonal window. It's been rallying into this earnings report. We'll see what that earnings report comes out as. Even with stocks running so confidently bullish, I think it's a great opportunity to consider a protected put if it was on shares, just in case something bad happens. But so far, the seasonality is working, and it's often actually a bullish seasonal report too. So when it comes into a seasonality play with earnings, you could do the trust but verify approach, of course, in a paper trading account, where we could just wait for earnings, see if it pops, and then consider it as a bullish trade idea later. Or for those traders that might want to be practicing an aggressive posture, establish a small position before earnings in a paper trading portfolio for educational purposes only, as always. Disclaimer the heck out of that. And just see how that works. Could be a good practice one. But anyway, it is bullish, earnings around the corner. Let's see what happens. We'll revisit it later this week. And then Walmart. So Walmart is due to have earnings on 8/18, Tuesday morning. That only leaves Monday to really prepare. Look what happened when they're coming out with their own Prime version of Prime. It surges, gets back up near the previous highs, consolidates, back tests this moving average, and it's pushing up. This is a bull flag. This looks really, really good. Now, the challenge with earnings are, it could go from, hey, 130, 132? It could be at 152 in one day. But the moment it breaks above this, that's going to get a lot of attention. Previous high, near previous high, previous consolidation point. If I take you back and do like a 3-year weekly, look at this. The area above 133 or so, it's huge. And this is setting up that it looks like it wants to break. So Walmart's looking really good. We'll cover this one in a video upcoming too when it gets through its report as well. So that is it. Bulls have the edge here. They're very, very confident with the way they're trading. They are above moving averages, and until we crack the 50-day, they're going to keep getting that edge on the daily charts, okay? So with that, I wish you a fantastic week ahead, and I'll see you in the next video.